I think it is because it creates this fear and panic in the investing public, which then reacts, right? So it's going to that psychology of an investor. But the beautiful thing about it is the charts are amazing in that they tell you when the changes are going to. I think traditional TA, I don't really use a lot of indicators. Like, when I show my charts in a little while, you guys will see that I use trend lines and maybe occasionally fibs and stuff like that. But I don't have a bunch of crazy stuff. I find that like the chart to me, and this is kind of an interesting take on it, is like imagine looking at a chart and instead of a chart, it was like a foreign language that you didn't know. And then the idea is that once you learn how to read that chart, it's like you're learning that language. And the chart will speak to you. It will show you things, whether it's a wide range candle, a reversal candle, an engulfing candle. Like these are things that tell you, and they don't tell you certainties, right? And you know this, and I'm sure your audience does, is that there's no such thing as 100% in the market. It's all about probabilities, right? So the idea is you want to be the house, the casino, not the gambler. And the casino, yes, they take losses sometimes, but generally over time, they always are winning. I think it is because it creates this fear and panic in the investing public, which then reacts, right? So it's going to that psychology of an investor. But the beautiful thing about it is the charts are amazing in that they tell you when the changes are going to come. And in fact, if you would, so let me show like my dollar chart here, my Dixie chart. Take a look at this, guys. So like the dollar had this big fall today, but look at where it was. Like the chart was telling you, like, look at this trend line, pivot high from early 2022 to this high and to this high. And so really it told you something was going to happen. And another chart that's just fascinating is the British pound versus the US dollar. And like, this is where we know that the Bank of England intervened by saying that they were going to start buying bonds again. But what's amazing is the chart almost told you something like this was going to happen. And this is what I always say is that the charts tell you news is going to come out or something's going to affect the price of something. You just don't know what it is. Like I didn't know the Bank of England was going to intervene. I just knew that, look at this. It was from 1985, the British pound was hitting a double bottom. And so the beauty of the chart is it's telling you something is likely going to happen, and then miraculously the Bank of England intervenes, and then you have this bounce that goes on, and the stock market here in the U.S. really ripped up today as well. We saw some gains in crypto as well. And I think that's such a true, like you, and this is one of the things I pay attention to. I do follow Twitter, not because I think it's a great asset for me to trade off of, but in fact, it's a great asset for me to use as a contrarian indicator. And the key to a good investor is being able to figure out when it's at these kind of maximum megaphone periods where it's just overwhelmingly biased in one direction. And then that's usually the inflection. Yeah, so the fear and greed index is okay. It does give you a general sense, but I haven't found it to be a great for like exact reversals. I would tell you another thing to look for is like I'll tune into the financial media, and the financial media, like, you'll have on, CNBC here in the US and they'll be talking all bearishly and all this and that and like, oh, this is so scary. And you can almost gauge from that when it's really powerful that they are in one direction, that it's about to reverse. Yeah, no, you're so right on that. And it is really hard. It's honestly taken me even longer than becoming a profitable trader, longer to kind of get my timing down to be more accurate. Because I would say it's one thing to be able to look and say, oh, there's going to be this big move in the markets, like, oh, the stock market is going to top out. Well, people thought that years ago, and then we've seen that reversal back down finally. But it's that timing, and it is honestly very hard because an individual investor is going to also have these emotional kind of fears in them. And it's a matter of you getting that under control as a trader and being able to be very much robotic, where then you get to a point where you can start analyzing and just, you kind of, it's almost something that comes over time where when you go through enough bull and bear periods in different markets, you start to notice, well, this is a lot of people saying it's bullish, but it's not to that crazy level yet, right? I would say like technicals on a chart are very much defined. Like a bottoming tail is a bottoming tail, those things are very easy to just learn. And once you learn it, you look to spot it. It's that second layer of kind of the psychological analysis of the market that it does take just a lot of time and effort of just monitoring things over time to get down. I do think that we are headed into a global recession, but remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market. So that would be my next stopping point. I think by year end we get there. Right, that is true. That is true, just sucking out that fundamental money that was printed. I also think, on a basis, I'm going to be looking to buy this level right here just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have two cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession, and the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down, where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period. Yeah, so overall, to me, the speed at which it comes down just would dictate how big of a bounce we would get off of it. So the faster it would fall, like for instance, if we were to go straight into it, let's say in the next 2 weeks, I would actually look for a pretty solid bounce back to this pivot high right here, or this pivot low. But overall, it wouldn't change the aspect of what I'm seeing in the charts, right? It still wouldn't change anything about what I'm looking for, where I still think we have to go at minimum down to the lower end here. And I want to show you this trend line. This is a pretty powerful trend line here to see. And look at this one right here. So this is another major trend line, where this is a long-term trend line where you could actually extend this out to 2009. And basically that is the long-term trend of this market. So just because we're going to 3370 or so, I still think we have to go even lower before you get to any sort of longer-term bottom in the market. Yeah. Absolutely, absolutely. So I think the bottom line is, I mean, and this is the thing though, is a lot of people out there will hear this and they'll be like, oh my goodness, this is horrible, we're going to keep going down. But honestly, there is so much money to be made in this market, because when you do get bounces in bear markets, as you know, they're huge bounces. So you just really, it becomes a market where the good investors and traders that can read the charts can time the market much better. But when you get these bounces, they are tremendous, and there's a lot of money to be made both on the long and the short side. Yeah, so and again, I know that sounds really scary, but like I think the best thing to do is look at like other markets that have gone through this, right? So number one, if you looked at the NASDAQ in the .com period, it had this insane move. In fact, let's go to that now. In fact, let's take a look at the NASDAQ chart. And then I'm going to go to the monthly chart just so we can see back to 2000. And what you can see in 2000, it was very similar to like, the vertical nature is kind of what we've seen here. I mean, look at the vertical nature here. And by the way, look at how big this is compared to this. I mean, that's how scary this market is. But as you can see, I mean, you had generally a pretty big drop, but there were some big bounces along the way. And then you went into this kind of sideways to up, like almost like a bull market within a bear market period, where you actually could make money by just going long. Just the highs were not taken out for 15 years. And I think another good example of this would be like the Hang Seng market. So if we look at the Hang Seng market here, which is the Chinese stock market, and we look at this, right? So here in 2003, the Hang Seng market had this insane run. You then had this epic collapse, but then look at the market since then. I mean, it gave plenty of opportunities for these ups and down mega moves where there was lots of money to be made. It just never really took out the highs and broke higher. So, I mean, if you're looking at the China stock market here, I mean, you could have gotten in at the highs of '07 and you're still down significantly on your money. And this is kind of what I expect for the US stock market, to go through this period of digestion. Another good example of this would be the EWZ, which is the Brazilian ETF, or the Brazilian stock market. And you can see here, look at this mega move from 2003 to 2008. And then you had this epic drop, which is kind of what I think is going to happen in the next, between what we've already seen in the next 12 months is what I'm envisioning for us. Then you're going to have these big bounces, but generally the market is trailing lower here. So I think, for me, this is kind of a good playbook for what I think the U.S. stock market and some of these global stock markets overall that have had big bull moves will probably go through. So I do think the S&P is it's a little bit more diversified, but what's still kind of scary about the S&P is that stocks like Apple, Microsoft, Tesla, Google, Amazon, they still make up like 20-25% of the S&P. They've gotten so big. So I do think that overall you may be a little bit more cushioned in the S&P 500, but I think also you're still going to see a lot of these same effects. So I just don't think, much like the tech.com bubble, when the NASDAQ fell, it fell the most. The S&P still had a nasty drop. It just wasn't quite as dramatic. Yeah, I mean, I've kind of been in the more bearish camp lately with the dollar. I think, number one, it's gotten way overdone. I also think that these other central banks, and we're starting to see it, are kind of in the position of saying, hey, listen, we need to kind of stabilize our currencies against the US dollar. So number one, I think they're talking to the US Fed and kind of coordinating. Like, I'm sure that when the Bank of England made this decision of what they ended up doing in the overnight, or last night in the overnight for me, they did talk to the Federal Reserve and let them know. So I do think there's some communication between central banks. But I think for the most part, I'm still a long-term bear on the dollar. I just think that in this kind of period where we're looking at a global recession, where you have Russia invading Ukraine, maybe China and Taiwan, the dollar is still king dollar. And so it's still going to be the strongest, even though longer term, 10 years from now, I do think the power of the dollar does wane significantly. So not in the near term. I actually do think that in the longer term, so I don't think Bitcoin is going to be the reserve currency. I look at Bitcoin as more like the digital gold. So I think it becomes more of that commodity. So I think that's where you see Bitcoin go. I actually do think the digital yuan does eventually become the reserve currency. It just takes so much time. I mean, these countries are so addicted to everything being run in US dollars that it takes just a long time for it to switch over. But I do think it's a process that will happen. And I do think as that switch happens to another reserve currency, remember, all these countries hold trillions, well, maybe not trillions, but at least hundreds of billions of dollars, because it's the reserve currency, and they have to do all these transactions. So as it wanes as the reserve currency, these countries won't have to hold dollars as much, and you'll see more and more dumping of the dollar on the open market. And that alone will create a situation where the dollar does decline. So I would say near term, you respect the dollar. I think you're going to have pullbacks, but it stays strong. Longer term, I am a bear on the dollar. I'll throw one more conspiracy into the mix here. And
Please.
This is something I've thought about. But think about this. The pound is almost at par with the dollar. The euro is almost at par with the dollar. Could it be that these currencies are being driven to par value to create a new world currency that basically is uniting a lot of the world? And again, I don't know if that's the case, but it is kind of interesting. If we see all these currencies kind of go to the same price, then why not create a one power currency that would then become the future reserve currency? I don't know. The only way I see the digital yuan actually becoming the reserve currency is, well, number one, China is powerful enough, and they're going to become more and more powerful. But I think they would have to really open up their economic scenarios, and you'd have to have a much more open economy for it to happen. But in general, I do think that over time that will happen. So the question is, how long does it take? And then is the digital yuan still a powerhouse at that point?